Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Barajian, currency analyst, and today is Monday, October 3rd. Today we're going to look at the major stock indices. So let's start with the Japan 225 cash index. The Japan 225 index has been consolidating since February when it touched a 16-month low of 14,776. Prior to this, the index had been on a downward correction from its Abenomics-inspired rally that peaked at 2945 in June 2015. The index is currently trading just above the Ichimoku cloud after falling into it in late September. There is immediate resistance from the 50 and 200-day moving averages, which are converging around the 16,600 level. Near-term indicators are neutral with RSI at just 50, and we also have the Tenkan Sen and Kijun Sen lines, which are both flat. A break above the moving averages is needed for a convincing rise above the cloud. A successful break above 16,600 would bring the previous resistance level of 16,935 in focus, followed by the September high of 17,162. However, the longer-term outlook is unlikely to change from the current neutral one unless the index challenges the April high of 17,764. To the downside, the 100-day moving average is the nearest support at 16,430, followed by the previous support level of 16,330. Moving to the German cash index, we saw the index break above the neckline in late September and has been hovering around it since. This also coincides with the top of the Ichimoku cloud and also the 50-day moving average. The index has been struggling to hold above this level, making the 10,500 level a very strong resistance area. Near-term momentum is on the upside, but with RSI barely rising above 50, it is very weak. If we see a strengthening of the positive momentum, there will likely be resistance around the 10,675 level. However, in order to resume the longer-term uptrend that started in February, the index needs to beat its August high of 10,806.5. Should the index reverse back into the cloud, support will likely come from around the 10,300 level. A drop below this level would bring into scope the 200-day moving average, which is currently around 10,025. Failure to hold above the 200-day moving average would shift the current bullish outlook to a neutral one. Finally, let's have a look at the US 30 cash index. The US 30 index has recently moved back into the Ichimoku cloud as it continues to consolidate its gains following its all-time high of 18,667.5 on August 15th. The 100-day moving average has been acting as a support level since the index plunged over 2% on September 9th. The sell-off took the MACD back into negative territory, though the histogram has since crossed above the signal line, the red signal line, and is trending up. If upside momentum continues to gather pace, resistance will likely come from the 50-day moving average at around the 18,400 level. A break above the 50-day moving average could fuel further gains to take the index back above the Ichimoku cloud and to challenge the August record high. To the downside, there is immediate support from the Tenkan Sen line at 18,250, and below that we've got the strong support from the 100-day moving average at around 18,150. A break below the 100-day moving average would open the way towards the bottom of the Ichimoku cloud and would weaken the positive medium-term outlook. Thank you very much for watching and have a great day.